Cybersecurity stocks, they're on pace for their best week in nearly 4 months. Today, Baird is out with a bullish note. We've made it our call of the day. So, Joe, CrowdStrike is yours. I mean, you have Datadog, too. But CrowdStrike they love that stock. It's their top pick, along with a couple of others. It's also outperformed there. Why do you, like it so much?
Okay, so there's three names to consider here. There's Palo Alto, there's Fortinet, and there's CrowdStrike. Immediately, I'm going to take Fortinet. I'm going to place it to the side. It's under pressure recently. In the case of Palo Alto and CrowdStrike, the bad news has been priced in. It happened in the spring. They made their low similar to Netflix in May. They've been recovering ever since. Why do I go towards CrowdStrike? Clearly, from a valuation perspective, you're getting a better blend of value and growth with Palo Alto. No question about that. Palo Alto trades at 50 times. CrowdStrike is trading at 85 times. But since CrowdStrike became public in 2019, this is where you're going to get that growth. And if you believe that cybersecurity is an area of technology that is going to see considerable corporate spending, which I do, then you want to invest towards that hyper growth. And without question, when you're talking about 58% to 62% revenue growth for this company, that's the right company to be in to correlate with your expectation of significant spending.
That sounds great, but then why is the loss year to date double the loss of Palo Alto? Isn't that what it all boils down to, regardless of how great the story is?
Okay, so I'm being convicted on a moment in time. If you pull back the lens, that's not the story that will be told when comparing these two stocks.
Okay.
And by the way, Palo Alto, I've owned it in the past. It's a phenomenal company. And for someone
you want me to go back a year?
Well,
I mean, I can go back a year.
No, you go back. You're going to have to go back. Go back to 2019.
I got you, but I mean, Crowd's down 44.5% over a year. Palo's only down 5%.
Okay, so let me argue the case.
Try again.
Let me argue.
Counselor.
Let me argue the case.
I'm an actual attorney. If you need my help.
We don't need you right now.
Okay.
Let me argue the case. Okay, if you are a more conservative investor, then Palo Alto is the stock for you. There's no question about that. Palo Alto is the better stock for you. But if you are an investor that is focusing on growth and you're trying to identify in this economy, in this environment, where are the industries where I'm going to get above trend growth looking forward, cybersecurity checks the box. And if that's the case, then I'm going to try and generate a little bit of extra alpha. I'm not going to look at the past return.
Okay.
And I'm going to try and find the company that has more of ability to capture larger market share. A bigger component of the total addressable market is there for them to grab it. Palo Alto is a little bit entrenched in that already. CrowdStrike's going to grow into that.
Okay.
I want to invest towards that.
All right. Jason Stipe, do you want to take the other side? I mean, because you're on the other side. You have Palo Alto.
Yeah. No doubt about it. So I hear Joe on all the points that he just made. And, I would just go back to the macro environment that we've been talking about for weeks. If I look at a stock, for me, as a portfolio manager, is trading at, 85 times versus 50 times, I believe the fundamental story hasn't changed at all for cybersecurity. I think, and I remain bullish on those themes. I think corporate spend, enterprise spend towards cybersecurity is not changing at all. But I do think price matters. I think in this area, especially, as Scott, you already mentioned from a return perspective, I mean, relative to the market, I mean, Palo's down close to 5%. I mean, it's really done well. I do think there's a lot of beta in CrowdStrike. There's likely a lot of upside. But for me, Palo's the name as one of the incumbents in this space. I think it's performed very well, and I think it still has 25% upside in terms of earnings growth from here. So for me, that's the name that I would select here.
Why aren't you here, Weiss?
First of all, you've put me in a very comfortable position, or uncomfortable position
of agreeing with me?
Of being agreeable at all. I'm not used to that. I'm not here because you lost the valuation umbrella of the market, so they've come down. I agree surprisingly, with something you said, which is that corporate spending is going to continue. I agree with what Jason said. You may notice I'm starting to sweat. With Jason said that I'd rather buy companies that have a more sane valuation. CrowdStrike also is a hype stock. It's what, if you go anywhere, it's what a lot of people are talking about. And I think it masks really what the fundamentals are, and that's a very solid company. So it's a shame that it's not quite in the ape camp yet, but That's what everybody talks about first. You got to own CrowdStrike. So I'd rather own something a little more sane like Palo Alto when I put money here. And I think it's a group that's going to continue to grow. Brenda,
You're not here at all. Why?
No, and I agree that it's likely to be a place that's pretty insulated from a cutback in corporate spending. It's really a necessity. But when we look at the valuation of the names out there, we just cannot get comfortable at current levels, especially given the backdrop, the valuation backdrop of the broader market. So certainly if we were to see a more protracted pullback, we would consider, but right now we're not.